Welcome to the show, Preston. It's great to have you here.
Hey, Steve. Great. Thanks for having me, man. I'm excited.
You're joining me all the way from sunny Dallas, Texas, on the other side of the world, where I imagine it's a little bit warmer than where I am right now. It's like, I don't know, 10 degrees Celsius here, which I don't know, what's that, 40 degrees Fahrenheit, maybe? I imagine it's sweltering over in Texas at the moment.
Yeah. I mean, it was close to 100 today, so it's definitely getting there. It's heating up. I mean, it
Hence,
can get 105, 110 out here.
yeah,
So
yeah. Hence why you've got the t-shirt and I've got the hoodie on today.
I know exactly. I actually
Nonetheless,
had a hoodie on before this because I work in it, but I
uh-huh.
thought before I jumped on, the guy that I work with, he was like, "You should probably throw on a shirt, so you don't look like." So
Yeah.
I didn't throw on a shirt on,
That's
but
fair. I often wear shirts, but today I was like, man, it's cold. My house isn't warmed up. It's early in the morning. I'm just wearing a hoodie. I'm sure Preston will understand. So let's
yeah.
uh
Oh yeah.
let's dive in. So I came across your work, Preston, on LinkedIn a couple of weeks ago. You posted about Crowdsurf, which is a venture you're essentially working on, equity crowdfunding platform. But I'd love for you to first just introduce at a high level what Crowdsurf is.
Yeah, definitely. So, you started to hit on, it's basically what we do is equity crowdfunding for creators. And so it basically giving creators a platform to raise money in exchange for a percentage of their financial output going forward.
Mm-hmm.
They then open up their offering and allow anyone, unaccredited or accredited, to hit our site, put in their information, and invest with a credit, debit, or ACH
Mm-hmm.
$50 into their career. That individual can then take that money and apply it to whatever they want across their creator career. Start a new channel, hire team members, start a company. When investors invest, they're very much investing in everything that individual does. And so that's a big thing that we saw is that these individuals, with large social media followings are very much companies themselves, but they don't have access to capital like companies.
Yeah.
And so we had to first create that and then give them the ability to take money from their community and other big time investors.
Yeah, it's interesting because oftentimes when you speak with, say, VCs or even angels, the first thing they often say is, we invest in people first and ideas second. But at the end of the day, they invest in ideas and business models. People are pitching a business, and here's how we're going to acquire customers, and here's our target market, and here's how big the market is, and all this sort of stuff. Whereas with Crowdsurf, it actually really is about investing in people first. And oftentimes, those people that you're investing in, they might have to take lots of, they might have lots of shots before they get one in, right? They'll have lots of at bats. And that's often the case with innovation, with entrepreneurship. Maybe it's not your first idea, maybe it's not your second, but these prolific creators who run multiple businesses, who have their YouTube channel, who have a podcast, they have so many different things going on oftentimes. And maybe all of them do okay, but there's one that's really going to, be that home run. And you can be that investor that has exposure to the entire portfolio of hits as opposed to just one that may or may not work out.
Exactly. Yeah. And it's very much about getting that individual capital, giving that individual capital to get in the game with that much more of a meaningful way so that part of it is they're going to make mistakes, try things that don't work, put content out there that's maybe not resonating. One of the creators we work with, it's something we really look for in these individuals is have they posted content for a long period of time without seeing any results.
Mm-hmm.
He posted 520 videos before he saw a dollar, just cranking away at, pounding away.
Yeah.
Finally changed his content style and started gaining 100K a month. And so in kind of entrepreneur terms, it's almost like, okay, he was cranking away, whether it was the same startup or that one failed, he just cranked, at a new one, now he's got a really interesting business across a number of different kind of, verticals.
Mm.
But that's a thing that we look for is that, idea of like, have they sat in the trenches and cranked away without the revenue coming through. It's a very interesting indicator generally of what could come.
Yeah, well, persistence is probably the number one determinant of success over the long term, and we see that with creators. And I think Mr. Beast oftentimes says, if you're starting a YouTube channel, publish 100 videos first before you start approaching people like him for advice, because you don't even know what you're doing until you've published 100 videos. And it takes time to start to develop your voice and figure out the platform and what kind of content resonates, what doesn't. And it's interesting in the podcast world in particular. I think 90% of podcasters or podcast launch don't make it to episode 3, past
Okay.
episode 3. And then of the other 10%, 90% don't make it past episode 20. So for every 100 podcasts that are launched, only one gets past episode 20, because people launch a product or a podcast or whatever. They've got this optimism bias, like, yeah, this is going to be great. I'm going to be the next Joe Rogan. They put out 10 episodes, they get like 17 listeners, and it basically falls flat. So with Crowdsurf, what you guys are doing, it's empowering creators to go that extra mile, to actually go the distance, put out 100 episodes, 200 episodes, and get to that inflection point without having to like worry about, where they're going to get money to pay their next bill from.
Exactly. I mean, that's exactly what it is. It's interesting because, these individuals are very much companies themselves, but they're forced to grow off cash flow because there's no access to capital.
Mm,
And so these creators that we talk to, they have a number of ideas, and they're like, "Hey, if I just had a part-time editor that I could pay a couple thousand a month, I would have these two other business lines going." It's like one of the creators we worked with, he's got a short form channel that does well, but he's got a long form channel. He's put 5 videos out. It's done 1 million, views. The first video he put out did 500K.
mm,
But he just doesn't have, it's 18-minute long videos. It's a little bit uncertain. The views maybe aren't quite there, but he's like, this is where the money is long term, these two channels. My
yeah.
short form can pay the bills, but I don't have enough time and bandwidth to take it over here. All I need is two part-time editors that I can pay each a couple thousand a month, and we have these two business lines which are going to be our long-term money makers.
Mm,
And so it's this interesting avenue where we're like, okay, well, your short form isn't really an investable idea. The long form is unproven, although you've shown potential. Well, what if we helped you tie all these together, and then you attributed everything that you're going to do for double digit years to this entity? All of a sudden, investors can look at that and say, well, I'm not willing to bet on one of those channels or the long form channel, but I'm willing to bet on you as an individual, knowing that I have more consistent cash flow here with larger RIP potential, equity venture like returns with these two long form
mm,
channels, maybe are a little bit unproven. And so you can start to play out and discount those cash flows back to present day. And you're like, wow, okay, this is a very interesting investment that I could, that I'm going to get annual distributions from, but I have venture like returns. You can see him and project out based on his numbers how it could be a double digit X return. It could also be a 0x return.
yeah.
It's venture,
Yeah.
but
Yeah.
it's interesting. So
And that's a good point, because investing in creators, I think I draw parallels to investing in startups. Like for every 100 creators you back, you might have maybe 5 in that portfolio of 100 who really go bang. There's maybe 10 or 15 that do okay, and then there's going to be a whole bunch that fail essentially to generate a return on investment, like minus zero essentially. So would you say that for investors that are looking at getting into this space, that it would be prudent to back, say, a portfolio of creators as opposed to going, all in on one? Like, what are you starting to see in this space insofar as investor appetite is concerned, and what you think is prudent?
yeah. Yeah, I mean, I think absolutely. I mean, I think spreading it across, because at the end of the day, you just don't know. And I think obviously, there's some, potential more emotional ties if you like the type of content.
Yeah.
It's a really interesting investment in that there's an experience attached to it. You're gonna have a dashboard where you get to follow his numbers on both the revenue and analytics.
Hmm.
There's gonna be updates that go from the creator out to investors saying, "Hey guys, I'm starting this new video. I'm posting it at this time. Let's all go like and share it the moment I put it out. Let's try and hit something on the algorithm." There's going to be this interesting community side that I
Mm.
could see some individuals saying, I want to put more in this, and there's certain tiers that the creators will put out that if you invest, this amount, you get baseline revenue analytics, everything. You put this amount, there's more special access. But I think for the most part, spreading it across, is what I would recommend.
Mm.
Before Crowdsurf, I was at an investment fund, and the main investment that I worked on, we did the angel round in a company called Commonwealth,
Hmm.
and they're fractional ownership of racehorses as well as funding golfers and tennis players. And so it's been really interesting to see some of the parallels in the model between those. We're on the Commonwealth side, they're probably a couple of years ahead. But, in a year and a half ago, we put out a horse before the horse had ever raced. 392 owners invested. Fast forward, the horse wins the Derby this last year,
Wow.
a year ago. And so you've had people get, 10, 11, 12, 12x on that horse. Had another horse do about similar, but you also have some horses that just don't quite, step up. And so I think there's going to be a very similar model here where you have those chances for massive venture like returns,
Hmm.
but also, it's the ultimate key man risk. And so you have risk. But I think the interesting thing as well, when you think of, a normal startup, you're generally playing for an exit, to be acquired, and obviously at the high end IPO.
Hmm.
You're generally not going to get like distributions out. It's just not, designed for the most part. On the creator side, the way the deal is set up is, whatever that percentage is, it's of top line.
Yep.
And so, creator goes and raises 100,000 for 10% of what they do over 10 years, make 100,000 first year, 10,000 is going down and being distributed out to investors. So you're still playing that equity, but you're getting an annual distribution to start taking down your cost basis, which is really kind of an interesting model. Uh, that I think, I think a lot of investors will like
Hmm.
long.
Yeah, absolutely. I mean, when you do invest in, say, a VC fund as an LP, you basically don't get distributions until an exit event, unless you happen
Yeah.
to sell secondaries, which is a very difficult process to go down. And essentially, you could be waiting 7 years, your money's locked up, there's no guarantee of a return. Whereas in this case, you do get those distributions on revenue, which is good to see. And with respect to the time you spent working at that investment firm, which was an angel investor in Commonwealth. So was fractional investing in racehorses, was that part of the inspiration behind Crowdsurf as well? Or like what was the
Yeah.
impetus?
Yeah, absolutely. So I had done a lot of work on the gaming space while I was at that investment fund,
Hmm.
and um, had looked at all of the esports orgs. They were raising money at crazy valuations. You have the smaller developers, you have the publicly traded publishers, Activision, there's a number of Take Two, Ubisoft, and then you
Hmm.
have kind of the picks and shovels. But one of the really interesting things I saw along that time was that you had this almost layer that sat on top of it in these video game streamers. And every single one of those players were going to these individuals saying, "Hey, I'll pay you to promote my game, my new keyboard." And you had the very early stages of Ninja being on the ESPN cover. It was
Hmm.
right around the time I was looking at all this, and it was like, this space is huge, and these individuals like control, like they have these massive locked in audiences that follow everything they do, and people are going crazy,
Mm.
and so they very much look like companies themselves, but they don't really have access to capital like companies. Investors know how to invest in a company. They know how to factor receivables, advance, money for projects. But them as an individual, they couldn't just take capital and say, hey, what's most important for you right now as a Twitch streamer? If I just invest in that, well, a year from now, when Kick comes in and wants to pay you $10 million, well, I'm going to get screwed out of my investment. And so these individuals need capital where they can just say, well, what's highest ROI right now, 6 months from now could be completely different.
Yeah.
And so when I worked on the Commonwealth company, I got very familiar with they're SEC registered, FINRA regulated. It's Jobs Act. They Reg A and Reg CF, which basically allows for raising money from unaccredited and accredited online platform. And so got very familiar with that and started doing work. And I was just like, this model, I think, would work really well with individuals raising capital. And so broke off, started that.
Hmm.
Um, the first year was figuring out the license, figuring out the contract so that an individual could raise money. A company raises money through a normal C Corp. When an individual that has an LLC raises money and you have outside investors that need to get 1099s, you have this kind of whole interesting complex structure that we really broke down to a simple place in our opinion. So yeah, the model came from Commonwealth, and then the idea very much came from while I was at that investment fund, looking at the power that was really flowing towards these individuals.
Yeah. And there is a lot of power flowing towards these individuals, not just in terms of views, but their ability to sell advertising and to promote products. I think we're seeing a massive sea change in terms of consumers listening and trusting, micro and basically influencers, whether they be gamers, whether they be YouTube personalities, whether they're social media influencers. You're far more likely to trust what they say over what a big brand says in some above the line television or television ad or billboard ad. And so we're seeing that money flow. And interestingly, from the world of podcasts, like you look at someone like, say, a Joe Rogan who gets about 11 million downloads per episode, and you compare that to CNN primetime television, they get about 400,000, and only about 80,000 of those are, 25 to 54-year-olds, which is like the prime demographic that advertisers seek out. And so we're seeing a lot of money move from traditional mainstream media outlets towards these independent creators, where you can get in front of the people that you want to get in front of, but also these independent creators have developed really intimate relationships with their audience. So their audience actually is more inclined to say, listen to Joe Rogan promote, I don't know, Alpha Brain or some sort of supplement like that and go out and buy that product versus watching TV and seeing some ad on Amazon Prime. Like you more or less just tune that out. So there is a lot of power that these individuals that you're backing on your platform actually have.
Yeah, 100%. I mean, it's like all power is flowing towards the individual.
Mm,
It's like there's a reason that even these big companies, they're doing all their product announcements and changes through the CEOs of the companies. And that's a little bit inverted. That's taking, but all founders are being forced to become creators because it's basically the ultimate like build in public per se, and yeah, with these creators, I mean, it makes sense. They've built these audiences that trust, they followed them through multiple years, different times, and like their audience and community like has built these relationships with them. And
mm.
so, it makes sense. I mean, the eyeballs are there. And so it's really interesting to see, and part of the reason, I guess, how we got here is from the piece that I put out. Been telling myself for the longest, I'm like, if we're gonna be doing this type of company, like I gotta go speak about it. I gotta go
Yeah.
write about it. Like the guy that I live with, who I work with, he's hammering me multiple times. We'll like kind of go off on some tangent about we're putting our deck together for something right now, and
Hmm.
we'll go back and forth for a while, and then I'll start talking. He's like, dude, you just need to go write this down. You just need to get this out there, And
Yeah.
so I'm trying to lean into some of that right now because people flock to people rather than faceless companies.
Absolutely, absolutely. You see that with everything as well. Like, we've kind of been touching on venture capital, even in that space. It's the partners that are building their personal brands online who founders want to flock to. Like we're familiar with the Mark Andreessens of the world, the Ben Horowitz. Um, you want to work with individuals as opposed to just the brand, because anyone can cultivate, a company brand and profile. But if that individual takes the time to communicate with others and engage with others online, not just for a day, not just for a week, but for years over a period of time, you're like, okay, I know who this person is because it's very hard for you to fake who you are over like 5 years through your social media interactions. Like that's a lot of it's impossible. Um, and so over time, you're like, actually, I kind of know what this person's all about, and I want to work with them. I want them on my cap table. I know they can help me. So it's absolutely true. And it's interesting what you said earlier as well about gaming. Like the gaming industry is today bigger than both the music and film and movie industry combined. Like it's insane how far that's come in the past sort of 10 years or so. Is that an area you guys will be leaning into in terms of uh crowdsurf and getting more gamers onto the platform, or are you kind of agnostic in terms of the sectors you're looking at?
No, I think definitely that's where a lot of our connections basically started. One of the interesting things is all the competitive Fortnite players are in Dallas. So
Mm,
server was east west, and then it converged down to Dallas. And so a guy that we've been hanging out with, talking with closely, is the biggest Fortnite streamer in the world. Comes over every week. We play basketball, and so as far as in the gaming side, that's definitely something we're interested in because I think like you have, subscription based revenue, and those individuals, can basically pretty quickly repurpose all of that content. You're going 8 hours a day, repurpose to short form as well as rip YouTube videos out. And so if you have a core audience around, even if it's just an in real life streamer, like we really are fascinated with the streaming side because that content can easily be repurposed and pushed to short form and YouTube. But really what we look for, I think, is like a core platform. Like what's your niche? That could be having main platform as Twitch video game streaming. It could be main platform as YouTube long form. But having some sort of subset niche within that. So
mhm,
this individual, he's one of the top competitive Fortnite players. So he's a pro, but then he's a top Fortnite streamer. And so he has this interesting, he plays at the highest level, but he's the top entertainer.
mhm,
And then he's, launched a company alongside it on the merch side, as well as his team has built out some worlds in Fortnite. And so, he's young, he's cranking, he's incredibly smart, and he's got this interesting long-term view, it seems like, but he's got a core niche, and so that's someone we want to have involved. Another creator that we work with, he does, like kind of comedic skits, and he'll dress up as multiple characters. And so it's this really interesting side where he can do everything from writing the script to editing to performing all the roles, which in my opinion I think leads to a very interesting longer term of he's very versatile, he's thinking business minded. So
mm.
yeah, but back to what you said, I think gaming's very interesting. If they show that they have like the business mind behind it. So yeah, but
Yeah.
definitely.
Yeah, and that is a key thing. Like we see this in the startup world oftentimes, where a software engineer will have an idea and they'll go off and build it, but they're really just about building stuff and they don't really have the business mind. Like they don't think about, okay, who's this actually for? What's the business model going to be? How are we going to promote this? And so it's important to find creators who also have that sort of business mind, and it's not just about creating stuff, because oftentimes that doesn't lead to, rewarding sort of monetary outcomes. But one thing I do have, like as an investor in the platform, I would be concerned about transparency into revenues, right? So how do you go about making it transparent? Like, do you offer dashboards? Like, do I get clarity around, say, YouTubers' views and um, how much they earned on YouTube, for example, over the past 30 days? Like, how does that work? And is that all consolidated into one place where I can see, yep, okay, here's how much they made, and therefore I'm comfortable that, 90% of their revenue, for example, isn't being hidden from my point of view.
Yeah. Yeah. So I actually think this is one of the coolest things about our platform that we want to get down on our site and landing page because with platforms like this, I mean the nervousness around, okay, am I just going to invest and get an email 4 months from now saying the money's gone and there's no reporting, no nothing.
Mm,
And that's one thing we very much leaned into. And so, once the offering is closed, every investor will have their portfolio and they'll have a dashboard and it'll show the creator's revenue by platform. And so there's kind of two ways, one, it'll be more manual at the start where they'll run everything through a bank account. Um, and, we would have kind of view access to that. And that would, from there, we'd be able to break out the different revenue streams. But basically with the contract, they signed an agreement as themselves as an individual to their LLC that says everything that I do, I'll put through this LLC. And there's tax return reviews that we would have as well as financial statements. And I think one of the interesting things is we're basically becoming friends with all the creators that we work with, and so they
mm,
want our help with all that, and we're like, gosh, great, okay, we can help with that. It's my background. And so I think investors will have a dashboard that marks out revenues by month, where
mhm.
they came from, and then your estimated distribution based on that. And you'll be able to like very cleanly see how it works, fees, that are within it, entity upkeep, everything. And so, and then you'll be able to go by creator, which I honestly think long term is one of the most interesting parts about this as that becomes very automated, being able to log in and you ask first graders like, over the last 3 decades what they want to be. It was like astronaut, president, athlete,
YouTuber.
singer, now YouTuber. And so
Yeah.
you honestly you almost give this interesting like play along as a YouTuber where you're literally tracking their analytics, seeing how money flows both on the revenue and analytics side. It's a really fascinating piece that I think is going to open people's minds once we're able to show it.
Mm,
Uh, but yeah, you'll have a dashboard that you'll be able to track basically everything.
yeah.
And
Yeah. I think what's exciting about this is a lot of people probably go on social media and they look at all these kids who are generating tens and hundreds of millions of views and earning, crazy money. And they're like, oh, wow, maybe I'm in the wrong profession, but they're not going to go off and start their own YouTube channel. And if they did, 99% chance, if not more, that they would fail. Whereas this gives them that opportunity to get exposure to that emerging market of creators, of YouTubers, of podcasters, hedge their bets, place bets across a portfolio of 5, 10, 20 creators and sharing the spoils as opposed to just stand on the sidelines and say, man, I wish I was born, 10 or 20 years later and I was part of this movement. Like now they can be part of it, which is exciting.
exactly. Yeah, I'm pretty excited for that part. The entertainment aspect. It's obviously an investment. That's why you invest.
Mm,
But the entertainment side is something we're really interested to continue to explore and play into
mm,
because Commonwealth, which is the one that does it with the horses, they have the entertainment side locked in. They have the races that everyone goes to. We had
yeah.
70 people at that horse's first race. We had 100 plus at the Derby. And we all just bum rushed the winter circle for the Derby. And I had $50 in the horse and I'm in the winter circle, I was like, this is the most unbelievable thing in the world. And so I think exploring what that looks like on our side, and I think that is by having this very singular, easy to view dashboard of analytics on the revenue and video side where people know what they're cheering for, you
Yeah.
know?
Awesome, man. And so how far along are you? Because I know you do have some creators on the platform at the moment. I came across Sean Hansen, who is a YouTuber with over 400 million views. He's currently running a raise on the platform. How far along are you and what sort of success are you seeing so far?
Yeah. Yeah. So just recently launched, he recently just launched his offering. And so he's doing kind of an extension on the timeline. There's been a lot of kind of just figuring out everything. He made some
Hmm.
campaign page changes, but we got the license end of last year, which is regulate with the register with the SEC. It gives us the ability to raise up to 5 million per creator. Um, we did a closed beta offering that was not available to the public, that was testing our tech, testing a SEC exempt offering, going through the whole process. And then we just launched Sean's. And so, from there, and there's certain things I can and can't say on specific open offerings,
Hmm.
but uh, a number of people that are talking to him and us about coming in a pretty big way. I think there's a huge educational component, which is what we saw.
Mm.
He had put a lot of writing and text, and it was text heavy early. And, I think there was a level of losing people. And I think there was a level of explaining with graphics what he's doing, how this works, what's going on, that we've really kind of come back to, I would say, because we are extremely early. This has just started to happen at the institutional level, let alone at a retail level.
Yeah.
And but we're pumped. We're excited because it's very much starting to be talked about more. Like that piece. I think you came in for the Liebermans. They're doing the same concept with entrepreneurs, second time founders, and so. Yeah, we're getting there. We're pumped. I think you're going to really start to see that picking up. I would say end of next week
Hmm.
on his offering, and then I think kind of the second part of the business, which honestly, I'm the most excited about early, is you have all these really big creators who aren't necessarily going to launch offerings, not right now, but they basically we're giving them a structure to be able to start to put smaller creators under their umbrella where they say, hey, in exchange for advising, doing stories on you, I'll do content with you, I'll take a percentage of your revenue if I can get you here. So
Mm.
you have all these big creators have all of these creators reaching out to them saying, hey, I'm willing to do anything. If you bring me on your stream, if you shout me out on a story, if you jump in my content, I'm willing to give up a percentage of my revenue. And so if you take that one step further and say, well, let's protect the smaller creator, and say, unless we get you here, then you don't give up that percentage, and you allow all these big creators to start bringing smaller creators underneath their umbrella, which builds them. They're going to start making content about them, pulling them in their videos.
Mm.
But it also, these smaller creators get to draft off of the success, and you all kind of rise together, understanding that it all centers around the big creator. And so that's one of the things that we're looking at doing with our first creator is two advisors, two of the biggest kind of creators out there, um, you know, allowing them to go into the offering and then helping Sean set up an advisory agreement. Maybe it's just one channel. Maybe it's with him as a whole. We've got kind of ideas there where he gets this immediate expertise, distribution. This creator gets another creator who's super talented with a bunch of cash to start creating content with him
Yeah.
in it. It's this really interesting, like, I'm not sure what to call it yet. It's like accelerator, incubator
Mm.
almost, that we're really pumped for. And so that's a big part of our focus right now. And then I think the funding will really start to, like ramp, probably in the next couple months,
Mm.
so
Now that is
we're really big creator side.
yeah, well, that's quite a compelling case in terms of like even in the startup world, you see this where you'll get lots of messages from people, say on LinkedIn, saying, "Oh, hey, can I pick your brain about this? Can I pick your brain about that?" Oftentimes, you haven't got the time, but if you had that added incentive of, well, happy to help if I can get a slight piece of the pie, should you be
Yeah.
successful on the back of all this support I give you, then you're more incentivized to do that. And I think about, I mentioned Joe Rogan earlier, but you look at his podcast, how many people that have appeared on that podcast that have then just gone into the stratosphere, right? Like Lex Friedman, top 5 podcaster in the world. Andrew Huberman would be another. And then just an endless list of comedians who've appeared on his show who now sell out arenas as a result of the fame that those appearances brought them. Like, obviously Joe Rogan did it out of the good of his heart, but if he had even 1% of the revenue that Theo Vaughn, Lex Friedman, Andrew Huberman, Mark Normand, Ari Shafir, all these comedians generated, he'd probably be making 2 or 3 times more than what he already is. And that's an interesting angle that you guys are exploring as well.
Yeah, it very much is. Yeah, it's pretty wild, honestly, and doing it in a way where, you know, no one feels like they're just like extracting as much value as you can, but at the same time, I mean, with like there's ways to do it where it's just like very streamlined,
Mm,
and you almost just have revenues that just flow all the way down basically immediately based on kind of some of the work that we're doing. So I think there's definitely something there. I mean, I watched a big creator who's in our network. He had a guy who was always super active in his stream, making funny comments, making everyone laugh. He was kind of ridiculous, but he was doing his own content. It wasn't really doing much.
yeah.
But the guy reached out to him. He's like, dude, I love what you're doing. Like it's so cool. Like, I appreciate you reaching out. He was like, talked and he's like, I think you'd be great doing this full time. Like, what if I blew you up, started bringing you on the stream? Like, we do some streams together. We'll do some videos. Like,
Mm,
and he was like, I'll take a percentage of your revenue. And he ended up wiping the deal because he became really good friends with them. But the guy went from $0 a month on the internet to 150K in like 9 months. And so there's this interesting, when you start to bring certain people into certain folds, like, to a certain place where they can go. And so, if you hand some of that part off to someone like us, we can help with some of the foundational items, making sure that you're ready if you get this exposure on generally the finance and banking side,
mm,
making sure you're ready there. And then, we can help with whatever else that's needed. And then we would contract with these other bigger individuals and say, if we can get your revenue here, like, we take a cut, distribute it out to all the other big creators. It's a really interesting model, that I think like a lot of people are willing to do because more and more people are viewing themselves as, I want to do this full time, but I know how hard it is to cut through the noise. I'm willing to give up a large percentage early because it's going to set me up long term, and then and you just give them a chance. So,
yeah. Yeah, well, I mean, you'd rather own a slightly smaller piece of a much bigger pie than 100% of nothing, essentially. So that,
yeah.
that just makes a lot of sense for creators. So if I am a creator and I'm listening to this and I'm thinking about how this could actually help me get to that next level, like what advice do you have for creators who are keen to explore crowdfunding and giving up a piece of their future equity? Like, what sort of ducks do they need to have in a row to give themselves the best chance of success listing on Crowdsurf?
Yeah, I mean, I think, they have kind of a core platform that's making money. I think is first and foremost,
How
they've
much
cranked away.
money? Like, just any sort of indication of revenue, like 5, 10 grand, or like what are we
Yeah,
looking at?
yeah, I think probably 10 grand minimum. I
Hmm.
think shown that, okay, I'm doing this, I'm getting, consistent, maybe 1K a month, with the ability to show how it could scale.
Mm,
I think, um, the general, creators that we've talked to are generally in that 40 to 50 to 60,000 of revenue. I mean, it could be 40 to 150 is kind of where we're at. But in reality, it's a core platform with the ability to show how it scales. And it doesn't mean a dollar for dollar plan for the money, but a general framework of, hey, I've got these two editors. It's 250 a video for long form. I'm going to take my content from 2 a month to 4 a month to 8 a month, like general framework. And a lot of that we can work through
Mm-hmm.
what we want to think is as big as possible. And so revenue generating platform, a general plan. And really those are the two main things. But also like, going back to your question, I think, it there's a huge educational side to what we're doing, especially when, hey, I as an individual am going to raise money in exchange for my almost entire financial output. And so what I would say is like, there's a huge educational component before that. And so if there are creators watching this, reach out to me, and it's like, let's start talking, chatting, because there's a number of nuanced questions that we want to make sure everyone understands, from a fundamental basis. And a lot of times that can help, with, the decision or with, how I plan, because like the first thing, it's like, you know, creator loses zero control. That's number one. It's written in the docs. It's just like, just zero, they could say, I'm going to raise 300,000 to build a team out to do this or that. They could
Mm-hmm.
get the money and buy a Ferrari and blow it up and say, that's our one video. Like we had it, we didn't make it. Like I would advise against it, but I don't have any say. You could say, hey, screw off, Preston, Um, so that's number one. And I say that specifically to people because I want to show there's no like, hey, you have 100% control until you say something that someone else out there disagrees with. It's like, no, 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 you just have
Yeah.
100% control.
I think that's a good point because I keep drawing parallels to VC because I think it's a useful sort of parallel to draw. But in that space, when you take on venture capital, oftentimes it means you've then got VCs breathing down your neck, forcing you to grow at all costs, to hire people you probably don't need because they're all about generating that return to their LPs and raising their next fund. So there is oftentimes this sort of conflict of interest. So in this case, it's like, well, just because you raise from the platform doesn't mean we're going to be breathing down your neck, telling you what to do and where to spend your money. You have complete autonomy.
Exactly. Exactly. And I think the cool thing that we've seen is when you have two people working towards a long-term goal, towards the same goal, but neither of you have to actually like, you don't have any deliverables or one can't tell the other what to do. It's a really interesting, like relationship, in my opinion. He's calling me for all types of things. I'm calling him for trying to figure out marketing and trying to figure out how to do content. And so it's this really interesting kind of relationship that we have. And but yeah, it's that I think another thing is like it's a true investment. The money's not owed back. We had some big creator, we had like one and a half. He came across our platform. He put a like a basically a hit out on us in the creator. And unfortunately, he didn't call out our website URL. I'm like, man, like if you're gonna put a hit on us, like call us out, let people like come check it out.
Any
Um,
publicity is good publicity, right?
exactly, exactly. But we watched it. I was like, it's a pretty well done video, but I disagreed with the majority of what he said because
Mm.
he was basically talking. He's like, so there's this YouTuber, he started to gain success and he's taking money in. Like, why would he not just get a loan? Why would he not just get debt? And I'm just like, well, there's 1,000 reasons because it's owed back, because it doesn't allow you to put yourself in a long-term mindset. Like,
Hmm.
if anything, he was caught like there's a lot of people that have said, well, is that indentured servitude? Is that modern day slavery? It's like, this is one of the most freeing structures in the world for creators, in my
Mm.
opinion. You give up 10% or less for a set term. You have a minimum that you have to make before you give up anything for the year. Um, you have complete autonomy and complete control. And if you don't make it, it's not owed back. Like debt is only good when there are very small like dispersions of outcomes on income. So if
Yeah.
like someone's going to making a 500K a year salary, like debt's the move generally, you know? Like, but if someone has fluctuating income where they can make 50K, but if they got an investment, maybe they go make a million, but they
Mm.
could very well just as likely stay at 50 or 100. Equity makes the most sense. So like, you're saying these things and I'm just like, well, there's a lot of there's a lot of reasons why this makes sense. And they're like, well, is
Mm.
this a cash grab? And it's like, no. I mean, no, he's like gonna go build his business. Everyone like gets a chance to participate in everything he does. He could be
Yeah.
giving up too much, but that's a venture investment. And so it was a really interesting way to see that video, and like
Mm.
everyone's like, this is crazy, like scamming. And I'm like, man,
Man,
I don't,
it's crazy. It seems so short-sighted that they would say that. And also, if I am doing okay on YouTube, maybe I'm earning 20, 30K or 40 to 150K, like you were saying, there's still going to be very few credible lenders who are going to say, okay, we'll give you 500K to keep building your YouTube channel. Like there's not really any
yeah,
security there. It's quite volatile, like you said. I doubt any bank would actually give you a sizable amount of money beyond a small personal loan for something
no,
like a YouTube channel.
exactly. I mean, that's the biggest thing. It's like there's a reason venture capital makes sense. It's because you allow someone to think very long term and maybe forego certain things in the short
Hmm.
term. Like right now, because these individuals are forced to grow off of cash flow, they have to think very short term. And so they may have to take a brand deal that if they had more capital, maybe they take a more long-term view on that brand deal.
Hmm.
Instead, they're like, man, I got to keep the lights on. And so by flooding them with capital, sometimes multiples of their current revenue, you allow them to all of a sudden start thinking more long term, and start thinking more, okay, well, let me forego some of my revenue generated. I've already hit my ceiling revenue over here to really go all in on these two channels because that's the way that we go make 500K to a million in a year.
Hmm.
And so you have this interesting, that's what venture capital is for. Let me just go hire a crazy team. We don't even know if this thing's going to work because of the small probability of that crazy return.
Yeah. Yeah. I mean, as a creator myself who's put out various forms of content over the years. Like if you said, oh, you can raise 250K or here's 250K, we'll take 10% of whatever you make. And therefore you can spend the next 12 to 18 months just going ham on building your podcast, your YouTube, whatever it is. Like to me, that's a no-brainer as opposed to getting a 100K loan on, 6, 7, 8% interest rates that I have to pay back. And I'm unsure of where that money is going to come from, whether I'm going to start growing that revenue in the next 6 months. And then I might end up with a freaking loan that I can't pay back. And that's going to affect my
Yeah.
credit rating. That's going to have so many downstream negative consequences. So it's almost a
Mm-hmm.
no-brainer.
100%. That's what I view too. And it was funny because like in the video, he'd have a number of things where he would be asked because like he puts hits out every 2 days. So like we
Right.
watched it and like, okay, this is all your content. Like,
Yeah. It's like
you're
someone that just puts out like 1-star reviews on restaurants on Yelp or
yeah, I'm
something.
like, dude, like, yeah. And so, but he had a number of interesting things where, he like would ask himself a sarcastic question, ask his fans a sarcastic question,
Mm.
and he'd be reading, and he'd be like, oh, okay, well, I'm not just investing in his YouTube. He's like, so what? I'm just investing in his shorts YouTube channel, and like he'd be like, oh, oh, right here it says that I'm investing in like his whole creator career. So what if and then he had a number of times where I'm like, okay, at least like his campaign page is doing something. It's laying something out because you keep
Mm.
answering your own questions. But I mean, it was honestly good feedback, from someone who is, I think he didn't make I think the best way that you can make this, the analogy I think makes sense for people is like, it's almost the same as a startup raising capital.
Mm.
There's different nuances because it's tied to an individual, but you're very much betting on that individual like a startup. And so it's very similar as a startup raising capital as the individual. Now over here you have key man risk with a startup, you have the ultimate key man risk with investing in a creator. But that's a part of it, that plays into valuation, that
Yeah.
plays into a number of different components.
Awesome, man. And perhaps one of my final questions, you did say education in terms of the creator and them getting across how this works from their perspective. I guess what's just as important is from the investor's perspective, them being educated on what future cash flows might look like. And for example, if I'm investing in a YouTuber, just getting across simple things like CPM. So, on YouTube, it's about what, $6 per 1,000 views on a video on average, give or take. Sometimes it's higher, sometimes it's lower. With podcasts, it's like $30 CPM for like 30 to 60-second pre-roll, mid-roll ads. But once you understand those numbers, it's very easy to then extrapolate and say, well, our goal is to get to X million views per month or per video, and that's going to generate this much ad revenue. But then there's opportunities for subscription revenue and Patreon and merch and events and all these other things. So it's quite easy to then paint a picture and say, if we do this, here's how much we should generate, and here's what your percentage will actually equate to in, say, 2, 3, 5 years.
Yeah. Yeah, no, definitely. And that's something we want to continue to flesh out on the creators campaign page that I don't think that I think will always be a work in progress.
Hmm.
Fleshing out some of those numbers and potential where that could go. So with Sean, I'd written out something on current dollar CPM on his long form based on videos, views, and then like extrapolating if you brought the two editors on for both of those, where we thought that could go. You know, I still think that's the move long term. We don't currently have that. What we did is to show we wanted people to anchor to a simple number at the start. So rather than talk about, which I think you're right in that we should talk about that, but I basically just said, hey, we said for the dollar amount of revenue per year, if you made this amount, this is the distribution per share over the 10 years. And it was very much trying to get people to anchor to a number. Hey, this number is after taxes, after fees,
Hmm.
after entity upkeep. This is the actual distribution that you will receive as an individual over the 10 years if they make this much. And we started to like try and anchor to a number like that. And so we kind of got hate from that YouTuber because like I put it down to like, well, what if he made 100 million a year?
Hmm.
Well, that's very low probability, but it's to show, hey, if in the small probability that he does what Logan Paul did, well, that number is going to be low because his equity ownership in Prime is double that
Yeah.
already. And so it was to show visual representation of what happens, showing, hey, you're aligned with everything. Um, Now I think a couple of people like, this is crazy. There's no way. And I'm like, it's a low probability, just the same way that people investing in Stripe 10 years ago, them turning into an $80 billion company is a low
Hmm.
probability, but it happened and it happens every day and it happens, all the time.
Yeah.
So I think that's, I'd love to talk more with you, like, as we continue to do these campaign pages on how people are receiving that
Mm.
right there. Marking
Mm.
down those actual numbers and then extrapolating those out over a number of years and showing, well, this is what could happen, and this is how.
Yeah, absolutely. And those success stories will continue to happen. And I think they'll get a lot more frequent over the next 5, 10 years as more people flood into this space. So it's definitely been a fascinating conversation, learning more about Crowdsurf. And I think what you guys are working on definitely has a space in the future of finance, in the future of startups, in the future of the creator economy. And I'm excited to see where it goes. Of course, if people want to learn more, they can head over to crowdsurf.xyz to learn more about being an investor or a creator on the platform. Is there anything else you'd like to share with our audience, Preston, before we wrap up?
No, I mean, I think you did a great job. I think calling out the site like that. I think there is a large educational process, and so whether you're a potential investor that wants to learn more or a potential creator that would want to launch on the platform, you can easily kind of hit that bottom at the bottom right and message with us. It goes directly to my phone. I get a text, so it's
Awesome.
super easy, real quick, and yeah, we're excited. We're pumped. So I
Awesome.
appreciate you having me on, man. And yeah, appreciate you reaching out.
No worries, man. Well, all my best with Crowdsurf.
Awesome. Steve, thanks so much, man.
Okay, we are done. Preston.